Welcome back to the Digital Asset Report. Bitcoin is back in focus today, but not for the right reasons. The world's largest cryptocurrency fell below 100K again as worries about the US economy weighed on markets. Daily liquidations topped $500 million, with long positions taking the biggest hit. The downturn across all markets came as Washington finally reopened after the longest government shutdown in history. President Trump signed a funding bill late Wednesday night, ending weeks of gridlock that froze paychecks and delayed travel. Economists say the shutdown cost the economy about $11 billion and left both parties bruised, but the deal brings some certainty back to markets and the broader economy. The U.S. Treasury is turning heads with a new forecast. Secretary Scott Bessent now expects the stablecoin market to hit $3 billion by 2030. It's a tenfold jump from today's $300 billion. He says stablecoins will become key buyers of U.S. Treasury bills and an anchor of global liquidity. Major banks agree. Citi calls this crypto's ChatGPT moment, while Bernstein predicts stablecoins will sit at the center of payments, settlement, and tokenized finance. And Singapore is moving in the same direction. The Monetary Authority of Singapore announced plans for new stablecoin rules and expanded digital currency trials. The framework focuses on full reserve backing, quick redemption, and international coordination, aiming to make regulated stablecoins safer and more reliable worldwide. In Japan, however, the digital asset treasury boom is losing steam. The Japan Exchange Group has paused new listings from firms holding large crypto reserves after several saw their stock prices collapse. Shares of Metaplanet, Japan's biggest corporate Bitcoin holder, have fallen more than 75% since May, signaling the end of the digital asset treasury bubble that once echoed earlier crypto manias. Back in the US, the Securities and Exchange Commission is redrawing the map. Chair Paul Atkins unveiled a token taxonomy plan to clarify when crypto assets are securities and when they're not. Atkins says networks evolve, control disperses, and at some point tokens no longer depend on an issuer's efforts. He stressed that this isn't a promise of lighter enforcement. Fraud is fraud, he said, but a clearer path for legitimate innovation. Meanwhile, Grayscale filed for an initial public offering on the New York Stock Exchange, joining Circle and Bullish in bringing crypto firms to U.S. public markets. The company manages $35 billion in assets and says the IPO marks a new phase for institutional adoption. Law enforcement is stepping up too. The Department of Justice, FBI, and Secret Service have formed a strike force to fight crypto scams tied to Chinese crime networks. Officials say Americans lose up to $9 billion a year to these schemes. The task force has already seized more than $400 million in stolen crypto and shut down major operations in Southeast Asia. And one last note on money itself, the US Mint has pressed its final penny. After more than 2 centuries, production ended in Philadelphia this week. Each coin cost nearly 4 cents to make, and ending it will save taxpayers $56 million a year. Pennies remain legal tender, but stores are rounding prices to the nearest nickel.
3, 2, 1. Done. All right. Good job. The Department of the Treasury and President Trump no longer believe the continued production of the penny is fiscally responsible or necessary to meet the demands of the American public. The cost savings of ending penny production will save the American taxpayer approximately $56 million a year in just production cost alone.
That's it for today. If you enjoyed this, be sure to give us a like and follow along for more.